Welcome to Business Incorporated live on Channels Television, your daily window into the world of markets, money, and global economy. Here's what we're tracking today. South Africa's president calls for greater investment in water security. And Iran's exports to Africa surged 85% in the second quarter of 2025. And Zambia clears over 500,000 tons of maize for export. Now, great to have you join us for this half-hour show. I am Will Ebong. First, let's check in on the commodities market. First up, global oil. We see oil prices climbed on Thursday as investors weighed what impact the U.S.-Russia summit on Ukraine on Friday might have on Russian flows. Now we see secondary sanctions looming over Moscow's customers, while the rising supply outlook capped gains. Now Brent crude futures, we see it up 0.26% to $65.80 a barrel. And we see WTI, that's the West Texas Intermediate crude futures, gaining 0.27% to $62.82 a barrel. Now both contracts hit their lowest in 2 months on Wednesday after bearish supply guidance from the U.S. government and the International Energy Agency, that's the IEA. Now, Trump on Wednesday threatened severe consequences if Putin does not agree to peace in Ukraine, although it wasn't specific about the sanctions. Now, let's move on to the metals market now. We see gold prices edged down on Thursday due to a slight uptick in the U.S. dollar index. Although expectations of a Federal Reserve interest rate cut in September limited losses. Let's see how spot gold fared. We see spot gold down 0.3% to $3,346.19 per ounce. We see the U.S. gold futures also down $3,402.50, and spot silver not doing so well. Also, we see it down 0.52%, more than 0.5% down at $38.40 per ounce. Platinum, however, and palladium, they did better. We see them up 1.14% at $1,358,000. Palladium up nearly 1% there, $1,142. Now, that's a lot of good news for oil metals, but not so good for the gold space. But let's see other commodities, especially food, things that we can eat. Soybeans, looking at that, a protein-rich legume that is packed with vitamins and minerals. That's a staple food globally and for feed production as well. It's used in everything from livestock feed to soy milk and cooking oil. But prices seem to have climbed about $1,040 per bushel, up nearly 6% from the end of 2024. But to unpack this, we have Ajibola Ayodeji, analyst at financial derivatives company, join us to talk about this. Good afternoon, Ayodeji. It's good to have you in the show.
Good afternoon. Thanks for having me.
I see global soybean prices have risen nearly 6% since the end of 2024. What's driving this increase, and where do you see the markets heading?
Okay, thank you. For soybeans, we are seeing an increase in the price of soybeans. Soybeans is used majorly for the production of animal feeds. It's used for soy sauce and cooking oil. And so we are seeing an increase in the price. And what are those things that are driving this increase? Is one, USA or America, which is the second largest producer of soybeans in the world or in the global market, are saying they are tightening their supply due to by reducing this planting land or planting acre. So they have tightened their supply, and that's why we're seeing the increase in the soybeans. That's one. And two, on Monday there was an announcement, or there was a statement that was made by President Trump that is urging the Chinese or urging China to increase their purchase of soybeans by about four times higher. So this also contributes to the increase in the price of soybeans that we are seeing. And lastly is the increase in the environmental protection policy that is put in place by large economies, USA, Brazil, and others, to increase the production of biofuel. And soybeans is one of the ingredients or one of the major raw material that is used in the production of biofuel. So this has bring about an increase in the demand of soybeans. So that's why we're seeing the increase in the price of soybeans at this time. But in the medium time, we are seeing that, according to EIU, they are saying that the price is going to fall due to bumper harvest in Brazil, because Brazil is the largest producer of soybeans in the world. They contribute about 40% of production. And Argentina, we are going to be seeing an increase because Argentina contributes by about 12% also, which is the third producer. So because of this bumper harvest in this country, we are going to be seeing a decline in the price of soybeans in the medium term.
Talking about the producers, largest producers, Nigeria produces far less soybeans than the potential it has, despite being Africa's second largest producer for the commodity. What are the challenges holding back production, and how can Nigeria boost supply both for local and domestic use and export?
Okay, for when it comes to Nigeria, yes, Nigeria is producing, but it's small compared to even what we need domestically, not to talk of exporting these goods. So one of the, I would like to just mention like 3 challenges that is facing Nigeria. And one of the one major challenges is the low yield, which is due to the maybe climate change and limited access to quality seed. These have contributed to the low yield that we're experiencing, low yield. And another thing is insecurity. Benue State is the largest producer of soybeans in Nigeria. Although we have other states like Taraba, we have Nasarawa, we have Kaduna that produces soybeans. However, because of the insecurity in this area and the land tenure issue that is happening in Benue, we are seeing a decline in the production of soybeans. And lastly is the post-harvest losses because of lack of storage facility, or let me say limited storage facilities when it has to do with soybeans, that has led to maybe post-harvest losses, which has reduced the output of soybeans. For Nigeria, I think what we need to do is to focus on policies that addresses yield improvement, that addresses value addition, that addresses market expansion. Because according to a research, they were say in 2020, I think 2023, Nigeria was able to just contribute like 0.25% to global production, which is very low. So there's need for market expansion, and there's need to improve our yield in order to meet the international expectation, or to meet the international demand for soybeans.
Thank you so much. We do hope that the government doubles down on that, Ayodele Ajibola, because we do know that this soybean is needed for live feed, and that would also translate to higher livestock costs in Nigeria. You know, meat is really already expensive. Thank you so much, Ajibola, analyst with Financial Derivatives Company, for joining us on Business Incorporated.
Thanks for having me.
Now let's move on to other stories. In Africa, South Africa's President Cyril Ramaphosa has called on investors to prioritize water as a critical area for investment. Speaking at the African Union EIP Water Investment Summit in Cape Town, the president emphasizes the urgent need to elevate water security on the global development agenda. He described the summit as a platform to connect governments with financiers and drive strategic partnerships for long-term water infrastructure solutions. Let's take a listen.
Here at this summit with 4 clear goals. Firstly, to endorse a summit declaration that commits us to scale up investments, to improve governance, and to increase accountability in the water sector. And underline, to increase accountability. Secondly, we are also gathered here to showcase a pipeline of 80 priority investment projects from 38 countries. Thirdly, to facilitate matchmaking between governments, financiers, and various partners. And fourthly, we are also gathered here to position water at the highest level of the global political and financial agenda, from G20 and COP30 to the UN 2026 Water Conference.
Now, still in South Africa, South African court has halted Total Energies offshore oil project on the west coast, ruling that its environmental assessment for Block 567 was deeply flawed and failed to meet legal standards. Environmental groups Green Connection and Natural Justice hailed the decision as a victory for communities and nature, urging all firms to follow due process and involve the public. The ruling comes as energy companies look to explore South Africa's section of the Orange Basin, hoping to mirror Namibia's recent oil finds. Now let's look at Iran's exports to Africa has jumped 85% in the second quarter of 2025, reaching $260 million, according to the Trade Promotion Organization of Iran. Deputy TPO head Leila Bagban announced the figures while in Nairobi for the Iran-Kenya Joint Economic Cooperation Commission meeting. She said the growth reflects Iran's push to expand trade ties with African nations and diversify export destinations. Next, we see Zambia's approved exports of just over 501,000 tons of maize and flour to southern African countries. Zambia's agriculture minister says the move will boost forex, open new markets for farmers, and cements Zambia's role as a regional food supplier. The bumper 3.4 million ton harvest was driven by good rain and farming support. Surplus grain will go to drought-hit neighbors, with stock levels monitored to protect local needs. Economists say the plan could stabilize the kwacha and aid debt repayments, but stress that smooth logistics will be critical. Now let's check in on the markets now. You see, we can't talk about all of this without seeing how sentiments are, but it was negative for African markets at intraday. We see the NGX down 0.22%. Profit taking is setting in. The rally in insurance stocks are down. Full offer for insurance stocks here, but we're hoping that investors will change their mind, possibly, but we see it at 145,550 points. And we see GSE in South Africa also losing that fresh high it hit yesterday at 102. Now it's back to 101,857 points. Down 0.41% at intraday. Let's look at other markets. EGX 30 also down over 1%, 35,457 points. And we see Kenya's stock market trading yesterday in the green, up 0.46% at 162 points, 162 points. I'm thinking of thousands here. Possibly is going to hit that. Let's look at Middle East markets very quickly. We see this Dubai market down 0.14% at 6,082 points. And Abu Dhabi also following suit. Negative sentiment permeating for the Gulf stocks, 10,271. Let's look at the markets in the Middle East. We see Saudi, however, it was mixed for this region. Saudi gained 0.06%, and the Qatari index also gained 0.16%. Very good markets for, well, mixed sentiments there. But let's see how stock futures traded in the U.S. They were near flatline on Thursday after the S&P 500 and NASDAQ composite scaled to new records, with investors gearing up for more data to assess the state of the economy. We see the Dow Jones down 0.02%, S&P 0.07%, all in the flat line, red for that in pre-market. More economic data releases are on the docket for today. July's producers price index reading, we're expecting that. Jobless claims data for the week ended August the 9th is due later today. Let's see Asia markets. How did they perform? How they close today's market? We see Asia. The Nikkei in Japan down after yesterday's fantastic close. We see the Nikkei 225 down 1.45%, and the Kospi in South Korea is up, however, bucking that trend 0.04%. And Hang Seng in China is down 0.37%. Let's look at mainland China. If they performed any better, we see that's also down 0.46% at 3,666 points, and the Nifty 50 in India following suit in that negative trajectory, closing down 0.02%. But let's see, did Europe markets perform any better? Let's talk to Lars right there. Lars, good afternoon. Did Europe, do any better in pre-market trading?
Yes, well, I can tell you we are doing pretty good. We are seeing markets up again in Europe. It's actually pretty good in Frankfurt, where we're up about 0.5% right now. So the indices here are holding on to yesterday's gains, and that is pretty good in and by itself. But there is a caveat. Trading volume is once again very low. We've seen that for a while now. It is also summer, so this is not entirely unusual at this time of year. optimism is also not really that broad. In fact, a new survey just came out and it shows that while some investors are becoming more optimistic, there's still only 36% of investors who are currently expecting for shares to go further up. A lot of what will really happen will, of course, depend on this weekend's meeting between Trump and Putin. It's been the biggest topic in Frankfurt as much as it has been pretty much everywhere around the globe.
Definitely, we'll look forward to what Trump and Putin agree tomorrow. But for the months now, we've seen the EU and the US having this trade conversation. Trade has also impacted the market, but there seems to be some confusion again here, specifically with the trade between US and the EU. What can you tell us about what's going on, Lars?
Yes, well, you can say that again. Confusion seems to be Trump's game, right? I mean, the U.S. president has been uprooting trade relations, of course, with other nations ever since he set foot in the White House for his second term. And now transatlantic trade had very long been going very well with goods and services worth hundreds of billions of dollars or euros, for that matter, going back and forth. Except Trump, of course, saw this trade deficit his country had with the EU, and he took it as a sign of the U.S. being ripped off. And he wanted to negotiate a new deal. He got that deal in record time as the EU was trying to avoid punishing tariffs from Washington. The problem now, despite the Trump regime promising to take down punitive damages on cars imported from Europe, or to lower them from 27.5% to only 15%, that downgrade of tariffs has actually never happened. It's about 2 weeks overdue now, and nobody really knows when tariffs will actually go to the level promised. For now, that's costing car makers millions, of course, and at the same time, it's costing markets around the world too, in a less tangible way, of course. See, Trump has sown all this chaos for the last couple of weeks, but the confusion he puts into market is just unheard of, and that is not a good thing for markets and investors.
You know why Trump is not lowering the tariffs as promised, as was discussed in the trade deal?
We don't really know what exactly the reason is, indeed. Trump, of course, is right now pretty busy with the Russia-Ukraine conflict, and some have actually asked if the EU and Germany's role in this conflict, with them strongly supporting Ukraine, and Trump seemingly being on the fence, if that had anything to do with the delay. However, the U.S. government says that is not the case. Now, what else could be behind the delays? Is it maybe a misunderstanding? Part of the EU-US trade agreement was a promise by EU companies to invest some 600 billion euros in the US. And shortly after that deal was signed, Trump explained on American television that, quote, "They are giving me 600 billion and I can use them any way I want," which is obviously not how investment works. Companies are not giving him money to invest. They might build factories or plants there, or they might move some of their business to the US, but that's it. Also, there are rumors, though, that Trump wants these investment promises of these 600 billion in some form of a guarantee by the EU, which will be hard to do because the EU, of course, has no business dictating to firms how they invest their money. All that, of course, would be basic facts, and they should be very well known to all sides, and just the mere fact that they're not adds to the current confusion everywhere.
Telenovela with Donald Trump. We'll keep watching, and I know you'll be tracking the story. Thank you so much, Lars Alter from Berlin, the Deutsche Welle's correspondent over there. Thank you so much for joining us.
Thank you, Will.
Now, Bitcoin, we did see Bitcoin over the night cross that new high at $124,000, and it's the greedy factor here. I don't know if it's the greedy factor, but Laddie's here to tell us more about that. Laddie,
you know, markets, it's all about greed, fear.
So what's your index saying?
Yeah, so it's still a greedy market at this point, about 68 points. If you're looking at the fear greed index, either from CoinMarketCap or from the official platform, but investors are still very greedy right now. Even though we're seeing red, on the screen, pullbacks are happening after Bitcoin hit that peak in early Asian trade. Then 124,000 after hitting that quick drop back. So we're still agreed there at 68 points. That's coming from extreme greed recently now. And the recent high we saw, that's on the back of legislation and what President Trump is doing with cryptocurrency there. We also see some of the headlines. Michael Saylor, Bitcoin mega accumulator and advocate, has dropped a powerful message as several altcoins are an all-time high. Saylor is saying on social media, that's X, to express his thoughts there that many investors in the cryptocurrency space become very excited about altcoins, but they should keep their eyes on Bitcoin. That's according to Michael Saylor. Then we see Bybit, the world's second largest cryptocurrency exchange by trading volume, is turning up the heat with the launch of Mexico in USDT mode, an exclusive P2P event offering users in Mexico the chance to earn a share of the 12,500 USDT in rewards. The campaign is already active and running through September. That's up to September there. So those are the headlines right there in the market. And we still see Ethereum there trying to hold up the market. But let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Hello, good afternoon, Ladi.
Good afternoon, Rume. So we're seeing Michael Saylor there, and he's saying, take your eyes off the altcoins and focus on Bitcoin. How are you seeing that?
That has been manipulative. You ask me, he's a Bitcoin daddy, and he's trying to project just Bitcoin. There are a lot of opportunities in the other markets. The altcoin has a couple of opportunities. So a couple of altcoins are 30% down, 40% down. If you get involved in them, it gives you another opportunity to be able to make some reasonable money off them when they go up. So just talking about Bitcoin have seen last night about 124,000. We're going to see some bit downside before we go even higher, because all of these has a lot to do with the traditional financial system. So you can't take crypto away because of the fact that a lot of people are coming into the market, Wall Street coming into the market big time, and some other investors are coming in big time. So it is difficult to just rule that out. So where the U.S. economy go most likely is where you see all of the funds flowing to. So it's difficult to just give a blanket statement to say, oh, Bitcoin, after Bitcoin, nothing. Is a Bitcoin maxi? That's what they do.
All right, so what do you make of, Bitcoin just touching that 124,000, then, dropping back to 120K so fast? Have we seen manipulation?
Yeah, so a lot of young traders need to understand that there's a way the market works. I'm not surprised. I saw this coming. Told a few guys, the market has been moving around 120, 122, 123 down to 118. It's been moving there for, I think, about 4 or 5 weeks now. So the market is looking for a direction, and trust Donald Trump he has particularly confused all of the whole market, with the realities on ground, trying to mock the Fed chair, calling him Jerome too late Powell, and a couple of other things that are going. So all of these are playing into the market. So the market is actually going to take a breather at some point, most especially knowing that all is not totally well, like all has been said. Oh, September, a lot of data that are actually coming out is showing that the market still need a few time to calm down. So not a financial advice, but for some of us looking at the market going up, we're not buying. It doesn't make any economic sense to be buying the highs and selling it low. You're losing money. So when the market is actually up that way, you just take a step back, watch the market do its thing going up, because most likely what happens is that when late shorts are actually locked out of the market, when the market go on, they just leave their position, take their losses, and join the market up. So it just go up that way. But sometimes it needs to take a breather down for fresh money to come in again. So, but at least this time, that is a couple of things are getting clearer. We're going to see the market go back a bit, and it's going back right now. You've seen it go to about 119K. We're still looking at. I'm looking at some reasonable support around 114, 115 thereabout. But worst case scenario, you should also understand that this is the bull market right now. I know a couple of persons will be surprised that I'm saying this. This is the bull market. So we could see some 20, 30, 40% down, then move up again for the final wave of the Bitcoin cycle.
Right. I guess Rume the Bear is starting to come out at this time. But very quickly now, I guess some investors are trying to make a choice either to go long or go short. What are you seeing?
Yeah, a couple of there's a lot of liquidity right now when it comes to leverage trading. Yesterday, I saw a couple of things that I haven't seen before in this space for a very long time. In 1 hour, most especially in Ethereum, in 1 hour you see a liquidation of about 200 3 million, $4 million. You know, 1 hour, like 1 hour has been like within the space of 1 hour, $3 million is gone. You know, so that is why I'm saying that if you're a newbie, stay away from leverage trading. Like
Right.
you lose your money, you lose your sense, you lose everything. You might just you know. So be very, very careful. Take your time to understand. Learn is very important. Learn before you earn. This is a knowledge economy. You don't have
Right.
to joke with not knowing what to do.
Okay.
As at the point of entry, so that you get in out safe.
All right. Thank you so much, Rumi, for breaking it down for us. Enjoy the rest of your day. So, Will, that's the final word. Learn before you earn.
Yes, it's always about entry points.
Right.
Knowing where to
Learn
get
before
it.
you earn.
And that's it on Business Incorporated. Thanks for watching. I'm Will Ibong, and we'll see you next time.